Hey guys, hope you guys are all having a great morning. We've finally made it to Friday. Today I want to switch the conversation back to housing. One of the topics we have discussed in great detail has been how the housing market is being manipulated so that Wall Street can purchase all the middle-class housing available in highly populated areas. This is done to artificially lower the supply to raise the prices even higher than they should be under normal conditions. As this has been going on, countless articles have been coming out from media outlets like Bloomberg or Forbes suggesting that renting houses might now be a bad idea. They talk about how home ownership is not all that it's made out to be and that newer generations should focus more on conforming with that's available instead of feeling cheated out of not getting what every other generation before them has gotten. Reading and watching how the media is trying to build a narrative that makes heroes of Wall Street on the current housing crisis while demonizing the poor, and now even the middle class, has been quite a bitter experience. Today I wanted to expand on why renting is not a safer or better deal than purchasing a house, and it's not only due to the lack of generational wealth you will miss out on, but rather, Wall Street has recently been documented as pressing corporate landlords to draw out eviction plans to get their tenants out in a more expedited manner. By the way, if you think this has to do anything with the virus, as if this has started now, you will be greatly mistaken. Wall Street eviction of Americans has been traced back almost a decade ago according to my research. It seems to have actually started shortly after the housing collapse of the financial crisis back in 2008. Before we get started with today's segment, let me disclose and state that I am not a financial analyst or advisor, and that all contents discussed in this video are provided as opinions. All efforts are placed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Everything presented is evidence I collect, and all opinions are based on research, experience and knowledge on the matter. Shout out to all my Patreons and one-time donors, who continue to support and carry this channel into greatness. Alright, let's get started. One of the greatest misunderstandings that happened after the Great Recession was that Wall Street was heavily affected in their pockets. The housing bubble burst that left millions of Americans unemployed and homeless was actually one of the greatest things to have happened to Wall Street. Companies like Invitation Homes, which was founded in 2012, started buying homes that were foreclosed, turning them into rental properties. Companies like Blackstone are considered pioneers in the post-financial crisis, especially after they were caught paying rating agencies to rate some of their bonds, which were integral in the big acquisitions they were doing. In fact, data suggests that nearly 60% of the debt they took on when buying foreclosed houses were rated AAA. As such, the model of business for Wall Street has been slowly shifting. Rent-backed securities have slowly become a very common funding mechanism. However, there has been a lot of drawbacks to this. Record high rates of evictions have been taking place all across America. Some suburbs have experienced over 30% in property evictions, which according to studies has made housing overall quite unstable. A report that was co-authored by Ben Miller put all the pieces together and showed that the percentage of properties with evictions were done by Wall Street landlords. These evictions are not happening in all the cities, but they are happening in the hotspots where there is a lot of growth. They are also focused on single-family rentals, which funny enough is also the portion where middle-class families are being forced into. A deeper look into how all of this started actually takes us back to the Fed. After 2008 and the burst of the bubble, the United States Treasury alongside the Federal Reserve outlined a new type of transaction for disposing of the hundreds of thousands of bank-owned houses. However, the Federal Reserve at one point in 2012 suggested that private equity firms should perhaps be the ones to start investing in the foreclosed homes since they were the one group with the most cash on hand. In other words, this housing crisis we are living in was actually started, or helped in the beginning, by the very Fed. In between the years 2011 and 2013, an estimated 350,000 homes were purchases by institutional investors. Because most of the federal and state laws are aimed at protecting homeowners, people living on rental properties have very few protections, and families can easily find themselves homeless in less than a month. Evictions are extremely cheap for Wall Street investors, with costs for court fees being around $100 and around $20 in ejecting tenants out. Wall Street is kicking tenants out quickly because they are raising prices quickly while not really elevating value on their properties. For example, interviews and court filings suggest that investment firms are intentionally impersonal and unresponsive, deliberately slow in making necessary repairs and keeping up with maintenance. This causes some tenants to withhold rent until they are responded and heard, but this actually is held against them. Like I said, there is very few regulations and rules to protect tenants, and this type of response is easy and justifiable grounds to kick people out in less than a month. They kick them out, ending contracts faster and then raising the prices as many people are moving into the areas. They are likely to find some family willing to pay extra bucks. We know through federal data and academic studies that evictions result in general personal loss of property, trigger job losses and leads to underperformance in schools, which then leads students to have worse outcomes and job prospects. A single eviction filing can result in a bad credit record which can and will consequently bar a person from renting somewhere else. We recently saw how the eviction moratorium extended earlier this year. Research was done into the conversations being had by Wall Street financial analysts, and we saw that aim of such discussions were to maximize profits on the wave of tenant evictions themselves. They are quite literally looking to make money by kicking people out these days. Investor-owned apartments have been tasked landlords with tracking restrictions imposed by the government, so that they can have the data accessible to them so that when things return to normal, they could capitalize on late payments while increasing rent prices under some preconceived excuses. This past June, rents soared 14.6% over the previous year, and publicly traded residential real estate stocks have been surging and running. NexPoint Residential Trust had a call with investors where they were bragging about occupancy rates being up 96%, while also noting that the company would aggressively push rental rates for the remainder of the year. Some have even gone as far as to say publicly that they are actively working to evict tenants as a way to boost up prices in shorter time frames. A real estate trust company called UDR Inc. showed record growth in one of its earnings reports this year. Weirdly enough, in one of the earning calls, a senior associate quickly started shifting the conversation to how they are looking to evict people. At one point, this associate stated, and I quote, "We have about 400 people that if we could evict today, we would." He went on to complain how some of the individuals were very non-communicative, and extrapolated that on assumptions that they were simply taking advantage of the system. This speech was given to make investors sympathize with them when they surprise 400 or so tenants with eviction notices. I guarantee you once they kick them out, they will charge them exorbitant fees while also raising the rent. This same senior associate then said, and I quote, "So the challenge for us in the future is that we would like to get the units back, reprice it to the market, and then get that revenue stream back online." Corporate landlords are immensely powerful entities that are enjoying the benefits of not having a regulated sector, and are penalizing the middle and poor class even further. They have already robbed them from houses, children and generational wealth, but that is not enough. Every penny will be scoured, and no stone will be left unturned if it means making a nickel. Already owning about half the rental market as it currently stands, a number that will keep on growing until they reach 100% or somewhere extremely close, Wall Street corporate landlords have made unprecedented profits this year according to all the data available. Yet, they also made record levels crying on statements about how much money they have missed out on. The fortunes they have made are clearly not enough, and they are looking to squeeze money out of renters while lobbying and investing in your politicians to look away. Red and blue and any other color representing any party is already compromised. We are entering really dark and uncharted territory when it comes to this aspect because, as I said, there is almost no laws or regulations protecting renters. Funny enough, renting is growing while home ownership for new people is dropping fast. Some of these companies are owned by the same banks and institutions at Wall Street, making sure that the squeeze doesn't take place. Everything is connected, and I hope I was able to raise some awareness and grow a wrinkle or two in regards to how Wall Street is raging forth in their attempts to destroy the world. I know it sucks that I bring you guys such depressing videos, but it is vital to be informed as to all the schemes that Wall Street is doing. Knowledge is power, as we have already seen manifest by our defiant nature holding meme stocks. Do let me know in the comments below if you have personally been affected or seen the effects that evictions have done. Feel free to also recommend topics you would like for me to address in these morning videos. Thank you all so much for making it to the end of the video. I appreciate all the love and support you guys have shown. If you want to support me and this channel a bit further, I have provided links which will be in the description for donations and a Patreon if you would like to pledge a monthly donation of any kind. This support really goes a long way for me guys. All money is spent on improving equipment and other parts of the channel so that we can continue to upgrade the quality of Simulate and Trade. It is my source of income as I am doing this full time now. It makes a huge impact and difference, so if you are able and willing, do consider it. I will be making a playlist of these home ownership videos for you guys so that if there is any person new to the channel that is interested in knowing the connection between the house market, Wall Street and meme stocks, they can find it all bundled together. I hope to see you guys later today. Until then, keep on buying the dip and holding to the moon.